The Oaks in France, they're burning your pants. Yeah, that sounds all right. Me. I have to find my motivation. Me. Me. All right, good. Well, then let's get this party started. Five. Excuse me for the mess here. Let me just clean everything up before we get going. Hope you enjoyed President's Day yesterday. So, welcome to Forex.Today. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. I'm a strategist for TradersWay.com, an awesome ECN. We want to be your trading partner for many successful years to come. That's why we're doing these webinars, so that I can help you gain skills and confidence. When you're ready to trade real money, perhaps you'll choose TradersWay. We'll help you. And you click the trigger, we'll put the trades in the interbanking system without any drama. That's exactly what you want. I think some of my slides are missing. Looks like they didn't upload properly. Just a quick look here. Change the color. S&P 500 has been generally up, but has just a recent little tickety-boo down on the hourly chart. Just starting to get through that 21. It still should be supported by the 55. Wait, sorry, that was the Dow. And then see how we broke through this 21 EMA? Still bullish, but we should be cautious because the bullish move is slowing down, but it's generally still up. There was a big drop in gold recently over the last several hours. Has bounced back up, but is still in a sell zone. And crude, generally up as of late, huh? That's a 4-hour chart. Yes, last week we hit a support area and rallied straight up. We're getting pretty close to that monthly pivot. I think we actually touched the monthly central pivot and got a bearish engulfing candle on the 4-hour. We'll talk about oil a little bit later today. This is the Nikkei, trying to hold its own off the 21, still quite bullish. Did I say Nikkei? Wow, am I off today, huh? That's the FTSE, sorry. The DAX was generally up, and then holy smokes, bearish engulfing candle down to the 55. You can just kind of see it here, which means you should expect a double top, perhaps a drop, which makes all these other things vulnerable. Euro stock's about the same, right? Disappointing German news. Then way over here is the FTSE. FTSE gapped up, dropped like a ton of bricks, and then is trying to rise again. So what happens when the Nikkei drops? Yeah, Nikkei down, Japanese yen up. Did you guys do that? The cool thing about the Nikkei is it opens fairly early in Asia. Kind of sets the tone. Yen pairs go down, which means Japanese yen goes up. That's correct. Okay? So you could just watch the Nikkei, right? Yeah, we're missing some charts here. It just didn't upload. Weird. All right, well, I guess I have to give you an Asian session update by memory. Let me tell you, in Asia, Bank of Korea left interest rates unchanged. There was very disappointing news out of New Zealand. I lost a lot of money. Their inflation was horrible at a 22-year low. Wah, 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 wah. And no real response to Aussie meeting minutes. That's all I remember. That's all I know about that. Okay, so, well, that's not bad, I guess, right? All right, so anyways, European session update. UK missed on the CPI. Too bad. How about Germany? Missed on the zoo. They don't want declines. Look at that. 52 versus 55 expected. That's kind of why you see the DAX collapsed and the Euro 50 collapsed. Ryan says Kiwi down all day. Yeah, but down all day because of that. 1 minute before that news, it was fairly okay. It was actually quite bullish. So that news came out, and that was that. So, but I mean, you kind of need to be there too, right? So I saw it happen. I was watching it. So, anyways, German zoo. All right, that's bad. So, as you saw before, you know, if you look here, this is the German stock market. Look what happened. Right. Okay. Oil advanced on the idea of some sort of cut, which is kind of funny, right? I mean, I was making jokes about it, right? That Saudi Arabia could cut, but there's no way like the Venezuelans and the Russians will cut, that they would be, let's say, self-interested. So anyway, so what did they agree to? It's sort of like if someone has stabbed you 5 times and you're like, this is so horrible, you just stabbed me like 5 times. They're like, all right, well, we've agreed to not stab you anymore. You're like, okay, I guess that's good. But I'm bleeding to death here. Take me to the hospital. No, but we won't stab you anymore. You're like, okay, good news. Thank you so much. So that's kind of where we are. They're not going to increase. They're not going to increase production anymore, which tells us they're at 110% capacity, right? We just found out that they couldn't possibly produce any more, so it can't get any worse, maybe. But we still have too much, so it's not a cut, I guess is what I'm saying. And it just might be because they know they can't keep, even if they came to a cut, politically they said they're going to cut. I think they all know that it wouldn't be legitimate one way or the other. Someone's going to cheat, or probably everyone's going to cheat anyways. Like Venezuela right now is, the epitome of a petrol state, and it's dying. I mean, it's practically dead now. How about this? It has like a negative GDP and 700% annual inflation. How long would you possibly survive if you were out of a job, had no money, and your rent goes up 700% a year? I mean, you're out on the street pretty quick, right? I mean, it's crazy. And you say, well, how could you possibly have inflation in a deflationary environment? Do you ever wonder about that? Well, you do two things. You borrow way more money than you can possibly afford, and then you print money on top of it. course, the big question is, when oil was $200 a barrel, why didn't you like save money? But Venezuela's not special in that matter because a lot of countries make the same problems, and it's at least Venezuela tried to get out of their petrol state. Who was it? How are you guys doing with your Venezuelan political history? Before Hugo, so Charles says Hugonomics. Was it Perez? He was president twice. And on his second time, he came back and tried to get Venezuela out of their petrol state problems of spending too much when they're making money and then borrowing too much when they're not making money. But anyways, we'll get on to the Venezuelan political history lesson some other day. All right. So anyways, and then they had their little meeting here, in Qatar, and Russia, Saudi Arabia, Venezuela, and Qatar. I don't know why they didn't invite Azerbaijan, because Azerbaijan's in some serious trouble too. Probably Kazakhstan. But yeah, good. They agreed not to increase oil supplies, or at the rate of which they flood the world. Well, but it's not freeze oil production in the sense of stop producing oil. What it means is not increase the rate of which they're producing oil any further. There's a big difference, right? That's why I said it's like they've agreed not to stab you anymore. And you're like, well, that's good, but I'm not feeling any better, right? It's like, is that going to solve any of our problems? No, we're still drowning in oil. We're going to continue to drown in oil, but they've agreed to not drown us any faster. But so it doesn't really make much difference. Ryan says OPEC doesn't include America and Iran and all this kind of stuff, right? Don't forget Armenia, not just America. But that is the problem, right? So one of the issues is if Russia was going to stop selling oil into the international market, it wouldn't stop pumping it because you can't. There's no real technology where you can just like turn the tap off and say we'll turn it off for 3 weeks and then we'll turn it on, and it's that easy. It's not that easy, and there's nowhere to actually store. If they were going to store like 2 or 3 months worth of production, there's nowhere to put it, and it takes a while to build it, and it's almost like you really can't cut, right? So what would be cool is Japan should buy as much oil as they possibly can, build a giant storage facility, and buy like 2 or 3 years worth of oil and store it somewhere. I was even daydreaming of a giant barge somewhere floating, holding 3 or 4 or 5 years of Japanese oil. The ultimate hedge, right? But I don't know. That's what I daydream about. Okay, what's up today? Baltic Dry Index should be a doozy, maybe a new record low. Some Canadian news, right on. Empire manufacturing data. All right, that'll happen too. Existing home sales out of Canada again. I wonder if Canada's going to move, eh? By the way, in Asia, the yen weakened for a while, and just before that, Canadian dollar just took off like a rocket. I'm like, holy crap! And then all of a sudden Aussie took off, and then all of a sudden everything, Aussie yen was straight up, CAD yen was straight up, Kiwi yen was straight up, pound yen didn't do anything. Euro yen was straight up. It's pretty amazing there for a while, but it looks like Canada's lost a lot of that oomph. It was a holiday, Abraham. The markets are closed. I don't trade when the U.S. markets are closed, right? Because you're missing so many market players. Remember, most of what you guys do is just pure technical analysis, right? Because you're still kind of learning the fundamental side. So you're pure technicians. And if the vast majority of professional market isn't in the market, then the likelihood of your self-fulfilling prophecy, your technical analysis, the likelihood of it working is diminished, which means it's higher risk and even potentially lower reward, right? Because maybe the market doesn't do anything. So if the major markets are closed, I don't tend to want to be a market participant. Does that make sense? Yep. Cool. So we got the dairy auction results today. So Kiwi's going to move probably lower, huh? Unless you expect a big spike in dairy prices. And some housing data. Great. Then later tonight, or for you tomorrow, who knows? Korean jobs report, Aussie leading index, Japanese machine orders. Look at this. Last month, negative 14.5. This month, plus 4.5. Uh-huh. Seems like we could be massively disappointed on that one, huh? So without further ado, let's play the happy music and then start trading, huh? Forex trading ideas for today. Where can I find them? Oh, here they are. They're at Forex.Today. Going there now. Cool. Uh-oh. I just noticed I haven't shared my screen. I think Windows has renumbered my screens again. It used to be 4, but now I think it's screen number 16. So I'm going to just start with screen number 16. And that looks right. Okay, cool. Sorry, I was just thinking. I know, weird. I know, right? You like that? I'm working on my American accent. It's pretty cool, huh? Getting better. Okay. Let's start where? Here about here. Okay. 4 hour here. Okay. Does that feel bullish or bearish to you? Okay, got my eyes on that prize. Kind of looking at the 4 hour turn here. But we still have a lot of pullback built in on the daily. So what kind of feels like is in the works is sort of like up, down, Up, down, up. That's probably the rest of the month, though. Looks like Bloomberg is suggesting we're hitting 19 pesos right now. Good deal, eh? So these are days, right? So probably up for today, down for 2 days, up to the end of the week, down on Monday, up Tuesday, Wednesday, Thursday. So what's coming up in the next few weeks that you think will be interesting to the Forex market? What's on your radar? Brexit. Okay. And we have the ECB meeting. Fed may be raising interest rates, or actually, you know, the market says there's zero chance of that, but at least a learning opportunity, right? Anything else? Anyone worried about the IMF World Economic Outlook, the WEO? There, Fernando got it. Getting closer and closer to that, right? So there we are on the daily. So now you drop into a right? You kind of put that together. Or it just stays red till it comes down to the buy zone, and then you look for a bounce there. Smaller time frames, what you can do is you can trap this as a channel. Oops, come on. Okay. Look for a breakout, one side or the other. Did you see the setup for today? You're late on it now, but what direction is the trend going on this chart? Okay. Well, down long term. I said on this chart. There's nothing long term on a 15-minute chart, but this has been down for 2 days. Okay. So in a downtrend, if you're a bet, you should be a bear if all your trading is this chart, right? And where do you sell? What have I taught you over these years? Let's just go back to the basics. You sell somewhere between the 382 and 618 Fibonacci retracement, and that's right there. Okay, so this is why I use these charts, right? You see this this line here? That's yesterday's low. And I have a line up here, right, at 1249. That's yesterday's high. That's the highest it was yesterday. Down here is the lowest yesterday. And this this gray area I just marked, the bottom is the 382, the middle is the 50%, and the upper, right around 12, it's actually 1202, almost 1203, is the 618 Fibonacci retracement of that move. See what I mean? So there's your London Open. Someone sold the 618 Fibonacci retracement. Oh, I'm sorry, the 50%. 50% Fibonacci retracement. Cool trick, right? Yeah, one of the oldest tricks in the book. What happened yesterday? Will it continue today? If so, can I get a 1/3 to 50% discount? Do you guys do that? Is that something you look for in your normal setup? Right on, Jimmy. Yeah, I've been doing that or teaching people that for I don't know how many years, 1,000 years. No, I don't do session high and low stuff. I don't care about those things generally. Okay, because what I'm looking at is just simply direction. Okay, so that tells me, right, whether I'm a bull or a bear. So that'd be more of a strategic decision. You look at that, I'm a bear. Okay, good. What do you want to do? I want to sell. Where do you want to sell? At resistance. Where's the resistance? Right? So you look at, it's almost like pivot points, right? You look at the 382, 50%, 618. There's your sell zone. Okay, that's it. That's where you want to sell. If it was the opposite, if the trend had been up for 2 days, and we'd look for a drop to somewhere between the 382, 50%, 618. It'd be the same in reverse. As they say in Canada, exactly the same, only different. Gee whiz, the sun is bright today, huh? Hallelujah. Nice little bouncy bounce on our channel here. Coming up to retest that 382. I have it at 1174. Okay, how about the pig? Well, okay, let's go back to that for a second. What I'm trying to teach you is what you should be doing. If you didn't do it now, Ryan, then what I'm trying to teach you is what you should do tomorrow and the next day and the next day and the next day and the next day and the next day. And I couldn't care two hoots about what's happening right this second, right? So if you were a bear and you were trading in the European session, you really should have sold way up here. You know, you might have been waiting for it to get to 112, didn't quite get there, so you might be a little late on this one, but you should be short at the top of this channel, right? So if not now, like if you're not already short now, then catching it after the fact is a little more dangerous, right? Because that means you need to sell after a higher low. Really? Because I don't remember that being in a good trade setup, right? Because we didn't make a lower low, we're in an up channel. So maybe you might find yourself later today, Ryan. Maybe you'll find yourself back at 112 and you sell it. And you sell it like top of the channel, 618 of yesterday's trading range. That would be a future thing, not now. But more importantly, the reason we do this in the morning is tomorrow you say, oh, what happened today? Is that bullish in relationship to this downtrend? Is the downtrend continuing? What was yesterday's trading range? What was the sentiment at the end of the day? You know, what's going to happen today on the London Open? Are we going to be at resistance? Do I want to be a bear? Where are my levels? Where are the pivots? Where are the psychs? You know, and then try to catch a retracement, right? All that kind of stuff. And do what we're doing here tomorrow. Right? But I'll tell you what, if it does this today, in the context of a longer term trend, that's pretty cool. Okay. And what you're finding is, in that case, we're probably just measuring just yesterday is probably not the bigger move, and someone's going to fib here. This could go all the way to, 1250 before it finds its downward move, right? Because the 50% retracement, because I'm going to look on this time frame, I'm going to look at selling somewhere like this. Okay? So we could end up doing this for a while, let's say, and then a complete total collapse. Because it'd be a 382 of the bigger move. But that's fractal geometry, right? And that's up to your own analysis, right? Let's go to pig scan. Volatility, if you play it right, just means you make your trades quicker. Right? Volatility is not good for long-term trades, but it's great for short-term trades. So on volatile days, maybe you make 10 or 15 or 20 trades in a day. Without volatility, if you have slow moving long-term trends, you might enter one trade and 24 hours check it and you're like, oh, I'm up 100 pips. Okay. But high volatile days, you might just, what I call is putting. I putt. I putt, 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 putt. And you'll have lots of, 25 pip winners. Nothing big because volatility is up and down, right? So you might make, if you're watching my hand here in the webcam, it moves up, drop, you buy it, move up, you take profit, drops, you buy it, up, take profit, down, you buy it, and then take profit again, and then consolidation here, and then you might start selling it, So for example, like on the yen pairs today, the yen pairs did skyrocket up until they hit the daily 21 and then they dropped. Well, that's supposed to happen, right? So you could put your way up and put your way down. Charles says he likes the analogy. Well, it comes from a long story. It was actually I was reading um, an article about Phil Mickelson, the golfer, and then he does a practice routine where he stands, I think it's 5 feet from the cup on a practice putting green, and he has to make 100 in a row, not just 100 in the hole, 100 in a row. So if he's on like number 72 and it lips out and it doesn't fall into the cup, he has to start again at 1. And he has to do it till he gets 100. Now, the reason for it is you practice obviously with good strokes, but you also develop a muscle strength or let's say not just muscle strength in the actual stroke of your arms moving properly so that you hit the ball in a straight line, but also a mental strength. Okay, so that when you're up for the putt, and if you make it, you become champion of the world. They put your name in the Hall of Fame kind of thing. You make millions of dollars. You're super famous. People respect you when you're an old person. If you make the putt, if you miss, you're a loser. So, do you fold under that stress? Or do you say, I've done this literally a million times and I know I'll make it? You want to feel like you could close your eyes and hit that putt straight and it's going to go in. Do you understand? If you're squared up, so you look at where the hole is, you line your feet up, you line your shoulders up, you know you can hit it straight. You can close your eyes. It doesn't matter. It's going to go in. That's kind of the mental strength you need as a trader as well. Because the fundamentals of your stroke is so good that if you're going to line up square, you're going to hit the ball straight, it's going to go in the cup. Can you do that with your trades? Well, so I thought about this of putt and putt and putt and putt. You're not practicing 25-foot putts, but if you're 5 foot from the hole, that ball has to go in. It's amazing if you're a professional golfer, you start missing 5 and 6 foot putts. You know what happens? They kick you off the PGA. You're just not that good anymore. You have to make the putts, right? All of them. So in trading, I thought, well, that's kind of interesting. Sometimes I am trying to drive the ball as far as I possibly can down the fairway. I pull out the big club, the big dog. I'll smack that 320. Cool. But sometimes golf is all about the 5 foot putt. And the funny thing is, the way that golf is scored, they're scored the same. The 5 foot putt and the 320-yard drive, it's the same stroke, right? So some days you're not hitting, 300-yard drives. You're making lots of short putt, 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 putt. And you're just banging these, 10, 15, 20, 25. I usually go for 25. Sometimes I'll hit resistance and I'll respect it, so I'll just take the 12. Or I'll get to the 25 too quickly, and what I'll do is I'll move the limit from 25 to closer to 50, and then I'll move my stop. And sometimes I'll get to 50, but sometimes I'll come back and get the stop, but the stop was moved to plus 12 because I locked in 50 and 50% and all this kind of stuff. But the idea is just short, doable putts that are going to go in the hole. You understand? If you're a baseball player, you're not hitting home runs, you're just getting on base every time. Right? Putts are harder to do in swing trading. Well, no, it's a timing issue. Okay, Guy. So it's actually one of the things we're focusing on. I'm mentoring somebody right now, and this is something that we're focusing on where we started with lots of swing trading, and he's finding good success with that. But now we're working on puts as a form of hedge to the swing. So let's just take the yen pairs as an example. Let's say your swing trades are yen pairs long. Okay. So you want to be long Aussie yen, for example, because you're earning a positive yield. And if global macroeconomics start to improve, yen pairs generally go up. Okay. But we're not in an uptrend, are we? So what do you do on days where the yen is strong? Like maybe in the last few hours, the yen is strong. Well, the last few days, the yen has been weak. Last few hours, the yen has been strong. What do you do in these periods when London opens and it looks like yen pairs are going to fall, not rise? What do you do? Putt, 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 putt. Okay? So you putt downhill and you drive uphill. So when yen is strong, what he's working on is lots, I want him to do like 10 trades a day if he can, just short term 25 pip putts. Okay. And is it really a hedge? It's not really a hedge because you're not trying to lock in current price, because what you could do is that ends up being bad. But on days where the yen is strong, make 1 or 200 pips. It's not huge, but you're doing something, right? The yen is strong. Good. Putt, 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 putt. Make 3 or 4 of them, right? If it's moving well, you can make 5 or 6 or 7 good putts. Leave with 100, 125 pips for the day. Okay, you made money today, and that kind of offsets the losses that you occurred in your floating P&L on your swing trade. But hopefully your swing will take off again, in the long term fundamentals, if they're in your favor, are going to carry your longer term trades, and those longer term trades are going to go up. And meanwhile, you might have made putts on the way down. The money in your pocket offsets the paper loss, but then you might also be able to buy like pound yen at a good retracement and have that go up. And so now you're not just long-term long Aussie yen. You might have gotten a nice retracement, so now you're long-term long pound yen with a stop at break even. Does that make sense? So what do you do if you're long-term long, but today it's short-term short? Well, make money. Right? That's my favorite strategy. Make money. So like here's an Aussie yen trade, right? So this is 1 minute. Let's move it to 1 hour. So this is I'm up about 250 pips here. And what I should be doing, but of course I'm coaching right now, but what I'll do later today is I'll probably look for opportunities to sell Aussie yen or other yen pairs. It doesn't even matter. If you find that convoluted to be short-term short and long-term long in the same pair, just find something highly correlated, like how about Kiwi yen, right? And so what I could do is I could just putt Kiwi yen short all day, putt, 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 and those wins will offset the opportunity cost here, but I can't lose money on this trade. So I'm long-term long. Meanwhile, I can short-term short by shorting Kiwi yen to the downside. You got it? It's good advice, isn't it? Oh, Ryan, gee whiz, that's probably the easiest of them all. How do you know the yen's going to be strong? How do you know it's going to be weak? watch the Nikkei. Look at your charts at the London Open. It's one of those things. Like, for example, why was the yen strong today at the London Open? Okay, look. Are you ready for this? Boom. Okay, this is a chart I've manipulated, so hang on, that's not there. Let's do, I've messed around with this chart too. All right, here's 4 hour. Okay, let's do it here. Ready? Daily chart. Boom. See? The 21. That's why. Easy. I mean, couldn't be any easier. It was supposed to fall. That's why. So the question is, if you were a bear, you would have sold it at the London Open. That's why I'm saying it's, easy. I mean, if you're a bear and you came to the daily 21, it's so easy. That's where you sell. That's why we use the 21 EMA, for example, right? And so you sell it there. Now, is it going to fall? I don't know. But if you're a bear, that's where you sell it. Okay, so the 21, daily 21, it's going to fall. If you're a bear, that's how you think, right? So it's not even a discussion, right? So if there's enough bears, it will make lower lows and come all the way down, maybe knock me out of break even. Oh, boo-hoo. FX Ambassador says, so are you expecting yen pairs to drop? I'm just telling you that's resistance. Is it going to drop? I don't know. How many bears are there? We've been in a bearish trend, so shouldn't it fall? Why wouldn't it fall? Right? It's just, I don't know why you wouldn't think it would fall. Okay? Right? The yen is strong. The yen has been strong since January. But bear in mind, I told you in August that in January yen would be strong. So why wouldn't yen be strong is the big question. Why wouldn't you sell it at the daily 21 at the London Open, right? At roll reversals and stuff. But I'm trying to make a portfolio play. Okay? I'm trying to make a portfolio play here, and I'm trying to play double bottom. So I know you trade the daily chart, right? I know you see the Aussie yen double bottom, but you also see the CAD yen double bottom, the Kiwi yen double bottom, right? And the Euro yen double bottom. I know you see all of those, so you're probably playing them, right? Wink, wink, nudge, nudge. So here, I'm just trying to play the Aussie yen double bottom on the daily. Is it a for sure trade? No. So what would Wayne do? Get a good trade in, which I think that's reasonably okay. Jam the stop at break even and go away. If the double bottom fulfills itself, we're going to go to, way up here. We're going to go up to 92. Okay. So I have a potential here of at least 1,000 pips, probably more. But is that my only trade? No, of course not, right? So what did we just talk about? Well, if you see the resistance and you believe it's going to come down for a while, right? Drop to a 15-minute chart and putt for a day or two. Right? So look at putt, putt, putt. Okay? There's no reason why you couldn't have made 3 25-pip putts today. So how did it start? Long-term chart at resistance. Roll reversal, 21. You say to yourself, you know what? It could probably fall today. Right? You're not thinking long-term, like it has to fall for 5 or 6 or 7 days. Now, it might actually do that, guys, because it's a downtrend. Remember? Am I conservative at the 21 or am I aggressive at the 21? Okay, so boom, you have to say, there it is, and it's going to happen. right? Ryan says, well, what about this? And what about the BOJ, right? Come on, dude, right? If it's at the 21, it's going to fall. End of discussion. In fact, before it fell, when I was mentoring yesterday in the Asian session, it was still going up, but we talked about putting because it was going to go up, touch the 21 and fall. It's going to. It's a fact. It's the way that the universe works. You don't like the laws of the universe? When you drop a ball, does it fall up? Right? So like, oh, but what about the Bank of Japan? Yeah, that might make the ball fall up. No, balls don't fall up. If you're going to hit the 21, it's going to be respected. That's it. That's the laws of the universe. So then you can say, well, I'm long-term long, but 21's there. It will come down. So today I may be short-term short. So today's tactical strategy is putt, 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 putt. Well, you might not like the Aussie yen coming down because you're praying it's going to go up. And on the long-term trade, you'll make 1,200 pips. So you better make some pips on the way down. Right? And then you might say to yourself, if it goes up, then someone needs to buy it. Where would they buy it? Oops, wrong button. Sorry. Bouton, wrong bouton. Okay. And where would the bulls buy? They're going to look somewhere in here. Okay, good. Good. So a bull would think something like, down and then up, right? So you're like, okay, good. So this might be down for a day or two. Fine. Drop into the 15-minute chart. London Open, sure enough, red, 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 red. You could have made 25 pips there, right? 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 Sell the pullback, do it again, down, 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 down. Sell the pullback, no. Sell the pullback, you're right. You just keep doing it. Oh, up, 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 sell the pullback. Eric says, why not? Why 25, not 35? You could totally do it. I do all kinds of funny things, Eric, depending on how I feel, which way the wind blows. Sometimes I do 25, 25. Sometimes I do 20, 50. Sometimes I do 15, 30. All kinds of things. I'll tell you another thing. Generally on swing trades, I get out at 333. Right? And you say, well, that's just a number play. Yeah, that's true. But I also see in my long-term swing trades that just somehow when I enter a trade, the trend always wimps out around 333 pips. And I'll tell you, if you look at my trade and calculate my entry to the exact top, you're going to find it's that 333 pips. And I mean, almost exactly. Not 330. That peak is 333 pips. Now, the weird thing is, I'm so late because I was conservative on my double bottom play that I'm like 100 pips off the bottom. I mean, it's not even good, right? What a loser. But from my entry to here, that's where I normally take profit. And here we are now. But it's just weird. Our Tim's measured, it's 333. I know. I know, it's weird. I know. And of course, in my mentorship yesterday, I hit it. And I'm like, you know what? I normally get out here. This is my 333. But I'm just going to leave it. And so I think you should focus on putting today. But yeah, it's weird. And I don't know. So very often, and maybe I'm making a mistake here, and probably I am, but very often that's how I'll play it. If I'm a swing trader, sometimes what I'll do is a 150, 333 OCO. or, if it's easier, 150, 300 OCO. And I'll say, okay, this is swing trade, boom. But if I'm putting 25-25, you say, well, Wayne, the risk reward ratio, blah, 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 talk, cry. It doesn't matter. If I walk away with 100 or 150 pips for the day because I made a bunch of putts, talk all you want about risk reward ratio. I'm not taking much risk, and it's almost like in basketball, right? If you got a shot that you can make every time, or at least you feel like you can, you got that little spot on the floor, someone passes you the ball, boop, and you just know most of the time that's going to go in. Take the shot. No one's going to laugh at you if you miss. You know what I mean? And you just know, because you've made that shot a million times, you're not going to miss that shot 3 or 4 times in a row. And if you did, it's a bad game. But it's not the end of your career. You know what I mean? Like, man, you missed that, 5 out of 10 shots tonight. I'm like, I know. I I got bad rolls. It just, like, the defender was good today, or maybe I'm tired and I didn't get the height I normally get, or whatever. But on any given night, you can make that shot. You know it. Okay? So that's what kind of putting is. You're not going for 3-pointers. You're not trying to go through a crowded lane to dunk over someone. But if you got that open shot, you'll take it. That's it. Because you know it's almost always going to go in. So, yeah, the other one, and you bring up the rabbits, which is funny because that's actually what we were talking about yesterday. And I must have been tired because I went into all weird analogies, not just, rabbits. Sometimes you got to eat rabbits, but, you also have to go for the moose. But if you sit around waiting for moose all day, you'll starve, right? And they're like, you're going to have rabbit socks and rabbit gloves. And I'm sure he's sitting there like, what is this guy talking about? And rabbit stew for breakfast and rabbit stew for lunch. And he's like, what is this guy talking about? I paid this guy money. But yeah, we actually use the rabbit analogy where you got to eat. You have to eat. But you also, when you're strong enough, because you've eaten today and yesterday and all that kind of stuff, then you should try to get some moose. But you can't just only hunt moose, only go for big shots, because there are going to be times, like, for example, what we were talking about yesterday in seriousness, is that if you're only a swing trader, because you'll get in periods where, you'll make way more pips on your swing trades. Like if you haven't made 5,000 pips in a month yet, well, when you finally make your first 5,000 pip month, it'll be because of swing trades. You might never have even had a 1,000 pip month. Fine. But when you do, it'll be swing trades. So you'll say, Gag Zeus, I got it all figured out. Right? But here's the problem. From May until August, your swing trades could produce potentially nothing. And what does an amateur trader do during that period? Draw down their account by 50%. Okay? So then when the market finally comes back, 2 things have happened. One, you've totally lost confidence in your swing trading. And you've convinced yourself the only way to survive now is shooting at rabbits or putting or whatever you want to call it, right? But the funny thing is, earlier you figured it all out. It's all about swing trading. But now you're like, oh, forget swing trading. That's dead. It's all about shooting at rabbits. And then August, September, October come, you have no swing trade set up. And you putt, and you're like, man, that's great. I made 500 pips this month. But you should have made 15,000. And what we'll find out is you worked that hard to only get back to break even, or you worked that hard and you didn't make any money, basically, right? You see what I mean? And then you'll say, oh, snap. I was being heckled one time at non-farm payrolls a year or two ago. And the guy's like, Wayne, I'm a better trader than you. This should be my webinar. And he's going on and on and on. I'm like, well, how many pips did you make this month? And he's like, man, I made like 600 pips this month. I'm like, all right, well, you brought it up. I made 15,000 this month. Right? Boom, boom, hey, right? Well, but so that begs the question though, how do you make 15,000 pips in a month? Because that sounds stupid, doesn't it? Doesn't that sound stupid? Like, what kind of monkey head would say something so stupid? But people that were hanging with me through August of that year, I laid it all out. I said, everybody, you are not even going to try to make money in the month of August. How much money did you make in July? I didn't make it. Well, then forget it. So here's what we're going to do for the entire month. We're not going to shoot at rabbits like we've been doing in July and June and May, right? We're only going to set traps for big game. But we're not going to get them. We know we're not going to get them in August, but we're going to set the traps. Was anyone around during this? And I said, we are going to buy yen pairs, move the stop to break even, and we're going to do that as many times as possible. 35, 45, 55, 60, 70, 80 times if we possibly can. But every time we do it, we'll move the stop to break even. Okay? Right? And the idea is, guys, that we're not going to make any money. And if you're up 100 pips, you're still not going to take them. But starting the third week of August, sometime around then, will rise. And you will earn the money you gave up in August. And again, I have to preface this where you probably didn't make any money or didn't make much money in July or even June because nothing really happened. So we're in an environment of nothing's really happening anyway, so why don't you listen to me, right? So if things go well, though, in September, October, November, you might be in 15 or 20 yen trades that suddenly produce. Okay? It's the whole focus of an entire month, day after day after day after the day, right? And what happened? We went from 110 to 125. So now imagine if you're in 20 or 30 trades, every single one of them has their stop at break even. They're not really producing much on the short term, and then all of a sudden, boom, 1,500 pips each. Right? And this is where people were, naming babies after me. Right? You're named after Uncle Wayne. He's kind of crazy, but I love that son of a gun. Right? But no joke, that actually happened. It took a month to set up. And we did it day after day after day. There wasn't anything else to talk about. So, okay, full circle. I didn't even know how we got on this speech. But full circle here, you need to do both. Because if that's all you did in April, May, and June and July of that year, you starved. Okay? But then, if all you did September, October, November, December was shoot at rabbits, you're like, I did really good. I ate lots of rabbits. And I'd have to say, are you stupid or something? How many pips did you make? Oh, well, I averaged over 300 pips per month. I'm like, what are you talking about? I'm making like 500 pips a month. It's just like stupid. What? 9 yen pairs move 1,500 pips and you're making 500 pips a month. Like, it's like, what are you, right? It's just mind boggling. Really? That's it? Well, how are you supposed to make any money? Oh, well, I thought I would jack up my leverage by, 2,000 to 1. Maybe that'll do it. But we know that's how you lose money, right? What's the quickest way to lose money in Forex? Jack up your leverage as high as you possibly can and then make a bunch of crappy trades out of desperation, right? I don't want to be a cliche. So do the opposite, right? I love the opposite. Do the opposite of everybody else, and you'll probably do all right. Okay? So you need to know how to be a trader. You need portfolio management. You need malice aforethought, right? You need pips in the first degree so that you can do really stupid things like 6 months in advance say the Japanese yen is going to be strong in January. Huh? That also happened. That's the other funny thing about it. Spent an entire month setting up Japanese yen trades where we're shorting Japanese yen until January. And then you just say, well, starting the second week of January, the Japanese yen is going to get strong. What? What? This year I had to apologize because 6 months early I said the Japanese yen would get strong in the second month or the second week of January. I'm sorry, it happened in the first week. I'm sorry. I did my best. I'm just kind of I didn't know. You're right. But I did tell you 6 months in advance. So it's not bad. All right. So here's the point. Are you ready? You can't just be a one sort of style thing. You can't just be a swing trader. You can't just be a scalper. You can't just putt, and that's the secret to life. You should be a well-developed trader. But also, what does it mean if I could casually talk about what's going to happen months in advance? Right? Is there a crystal ball? Or is there a pattern that can be learned and repeated? Well, Guy, my homework could just be that I've been doing this long enough, right? 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 I'm 42 years old and I'm the old man in the room. So, therefore, it's learnable, it is repeatable, it's within comprehension, right? Good thing is you don't have to figure it out on your own, right? How long is it going to take you to figure this stuff out on your own, guys? It took me 10 years of full-time work. Oh, thank you, Bruno. Don't forget to leave reviews on Amazon, guys. There are some reviews up there saying it's the absolute worst book ever written. I'm like, really? Not even just the worst Forex book? I'm like, that's really bad. It's the first book I ever wrote, and you mean. Like, I'm not a writer, I'm a trader. Right? It's funny. One guy left a bad review, and here's what he says. He's like, I picked it up in a bookstore. I read it for an hour and I put it back. This book it sucks. I'm like, you didn't even buy it. I'm like, oh, well. So it is learnable, guys. It is teachable. There's no sort of child prodigy, abnormality. Um, you're going to figure this out way faster than I did because I'm teaching you. So you'll do fine if you know, if you learn, right? No, thank you, Bruno. Okay. So you guys will do just fine. These are patterns that repeat, and if you don't do well this year, you'll do better next year. I'll make sure of that. So we're already out of time, so I apologize for the distraction, but I wanted you, I guess once we started talking about it, I wanted you to appreciate that there are different tactics, or I guess it's even really it's on the strategy side. So I'll say there are different strategies where you have to say, all right, I'm going to hold this trade for a month or 3, right? But this next trade I'm going to hold for 3 hours, not 3 months. And there are logical, intelligent reasons why. For example, I'm buying a double bottom on the daily chart. So if it actually fulfills its destiny of reversing, which a double bottom is a reversal, then I'm going to earn at least 1,000 pips on that trade, probably closer to 1,500, according to where the next level of resistance is. Now, I know I don't have the fundamentals yet, but maybe it'll take me all summer. Maybe I sit on that trade for 4 months, guys, and earn interest. It's no work out for me, right? Okay. But then we get to a logical area of resistance on a daily chart. Now remember, the market hasn't reversed yet. I'm only trading a double pattern that tends to reverse. Okay, good. So you could say, all right, now we're at resistance. This could fall for 2 or 3 days. Great, fine. Therefore, because of that, I have a new strategy. I'm going to look to buy Japanese yen now. Could be just for the day. It could be for a couple of days. Don't really know. Depends on what happens. And it could be maybe for 3 months we're still buying Japanese yen. And my Aussie yen long gets knocked out of break even. Oh no. Right? Funny thing is, only I will know and only you will know. Will my clients know? No. It'll just be a break even trade. Won't even get recorded in the stats. Oh well. Right? So who cares? It doesn't exist. My worst case scenario is it doesn't exist. It was a break even trade, gets recorded. Meh. Right? Actually, it's not a break even trade, it's a -1 pip trade. All right, well, whatever. So it doesn't exist. So who cares? Right? But if the yen is gaining strength today, tomorrow, the next day, next week, next month, well then I could be putting that whole time. Putt, 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 putt. And think of it. What's the likelihood you're going to lose 10 of those trades in a row? I would say just like 0. What's the likelihood you lose 5 out of the 10? A day where things just don't go well. Okay, where it was choppy. It wasn't volatile in a sense. It was choppy, where it didn't go up nor did it go down. Those days can happen, but therefore, in that case, 5 out of 5, 5 out of 10, you don't make any money, but you didn't lose any money. But you had opportunities. What I don't like is seeing traders that make 2 trades a day. I'm like, dude, you didn't even have an opportunity to get going. Okay, I want opportunities. But more often than not, I have more winners than losers. And in a volatile day like kicking off at 21, it's you're gonna get it. I don't know any other way of saying it. So you can certainly make 3 or 4 or 5 or 6 putts in a row even. On days like this, you can, just trading one currency pair, make 100 pips. You can make 4 putts on yen pairs off of a daily 21 in a downtrend. You can. You can. It shouldn't be much of an issue. But what if you're trading 5 yen pairs? You could make 10 or 20, 25 putts today. And you'll find out like you'll make 15 of 20 of them, right? Or 13 out of 21, but you'll be profitable. But there will be days that are unusually good. And you'll find that those are great days. But I want you to have the mentality of we're at a 21 on the daily. This is going to fall, and I am going to stay at my desk today, and I'm going to trade the hell out of it. I might be here 9 hours. I might make 22 trades. One trade at a time. Move the stop to break him, get another one. Then do another one. Get another one. First one's on the Aussie yen. Okay, that's moving. I'm up 12 pips. Jam the stop. Go to the next one. Boop. Get that one. Move that stop there. Oh, go over here. Get that one. Don't know, right? Maybe every 5-minute cycle, which means about every hour to an hour and a half, you do another one. Putt. And sometimes these days are really good. There's no reason why you can't be in triple digits. And really, you should be in triple digits. Okay, but you have to have that mindset. And then on days when the macros are working in your favor, where the market's turned bullish and you are a bull, those are the great days, because those are the trades where I place one trade. I might nurse it a little bit and move my stop closer, and then leave it. Those are the ones I sleep through. Wake up in the morning, oh, look, I'm up 100 pips, right? Which is different than putt on a 5-minute chart, putt on a 5-minute chart, putt on a 5-minute chart, putt, right? 25 on this one, 15 on that one, 12 on that one, 35 on that one. And you work. It's hard work. It's mining. You're down there with a pick and an axe and a pickaxe and a shovel and a bucket, and it's hot and dirty and sweaty and stinky. But sometimes it's going to be like that. But you should like it, man. It's pretty exhilarating, right? Look at this chart, guys. Putt, 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 putt. Oh, you might have lost on this one, but catch the next one. Putt, catch the pullback, putt, and putt, and putt. More putts, putting all day. Right? Even on 15-minute charts, right? Look at the cycle. Drop at the London Open, 50% retracement. Look at the oscillator. Drop, pull back. Look, roll reversal. Sell it again. Drop. These are 15-minute charts, so there should be 3 trades today. Right? But you have to say, I'm sitting down and this is what I'm going to do today. Unfortunately, what's happening though, more often than not, is you don't even see we're at a daily 21, and this is just I don't know what you're making decisions on, right? I really, right? I mean, I really don't, right? So you're not I think the bigger issue is you're not starting with higher time frames. You're not putting the basics together, like, we broke out to the downside, we retraced, and it's been down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's been down for an entire month, and we've made a retracement, right? If you use FIBs, you would do something like this. Okay, I use like roll reversal price action stuff, but also the 21 EMA. Those are big for me. Just Again, right? Read the book. I wrote it like 8 years ago. Nothing's changed, right? Sell it at the 21. So it's that part that you're missing, but you start on your 15-minute chart and you're probably looking around like, where's the trade? Well, what's London going to do? Oh, look, a red candle. Now I got to sell. Or look at the big green candle. I guess it has to go up. And you're reacting. And that is just death by 1,000 lashes. Versus saying, all right, we're in the context of a downtrend. Someone's going to sell there. I need to be ready. And then you, like scientific methodology, you drop into a smaller time frame and you say, right around here I should see red candles. Oh, snap. At what point do you wake up? Right? At the very least, on a 15-minute chart, you're trading something like that. All right. But the money is made here. Pulling the trigger is easy if you have a strategy. You cannot be all tactics. Right? Would you want to fight a war? All tactics but no strategy? You know what I mean? Think about it that way, guys. You want to be all tactics and no strategy. No, Ryan, it could be even worse. You'll find yourself standing in the middle of Baghdad next to your Humvee directing traffic, and you say, but I joined the Marines. What the hell am I directing traffic for? Right? Maybe there's no strategy. I don't know. I don't mean to be political, but that would bother me. So might as well go. With that note, let's remind ourselves that, the world needs a lot of peace and a lot of love. We need a lot of help. So peace on earth. May the pips be with you. May your profits be above average. But I want to make the world a better place by getting you financially stable, by giving you a skill. And then maybe we can meet up somewhere around the world and have a drink and laugh about the good times. And you'll say, oh, by the way, here's my oldest son. His name's Wayne. Here's my middle boy. His name is Wayne. Here's my daughter. Her name's Wayne. Oh, there's my two dogs, Pip and Uncle Wayne. Anyways, no, but if that means you're a huge success, in all honesty, then that's cool, man. That's what we're all going for. Everyone here wants you to be a huge success. So let's make that happen, all right? So again, peace on earth. May the pips be with you. May our profits be above average. Don't forget, open an account at TradersWay.com. Cheers.